Hello traders, my name is Logan with Funding Talent. Today, we're going to be doing our market forecast for the first week of February. In this video, we're going to be highlighting the fundamental drivers for this upcoming week and the best technical setups for you to keep your eye on. The reason for this is we want to give you guys a good idea as to what you should be watching and why moving into this next week. So let's get right into the charts. Hello traders, so here we are looking at the news for the week. As you can see here, we have high impact red folder news pretty much the entire week. But our most important day this week is going to be Friday with our NFP news. Every trader knows NFP is not the best time to be intraday trading. If you're swing trading, it's going to be less problematic for you. But if you are scalping or intraday trading, be sure to use proper risk management and move your stop losses at this time of day. As well as Friday, we have a lot of high impact news on Thursday, especially for the pound. And on Tuesday, we have even more red impact news for the New Zealand dollar, also known as the Kiwi. This week, markets were fixated on an astronomical run that was caused in Gamestop Corporation, which was at one point up 2,000% in less than a month. The insane buying pressure was driven by retail investors. These retail investors were using online forums, such as the subreddit Wall Street Bets. They used Wall Street Bets to organize a push at the expense of hedge funds such as Melvin Capital. Everyone's been hearing a lot about that name because that was one of the main funds that was bailed out by Point72 and Citadel this week. GameStop shares have surged from $19 at the start of the year to as much as $483 this week. Since then, the stock has been falling off. Stocks that experience these parabolic moves usually have a combination of technical and fundamental drivers behind them. Investors had borrowed shares from brokers and sold them in the market with the expectation of price going lower. This is what is known as short selling, and most of our traders are familiar with this. It also works in stocks the same way it works in Forex. The expectation is that price would fall so that they can buy the shares back, return them to the broker, and then pocket the difference. The problem is, for investors that are short a company, is that they will eventually have to buy the shares back no matter what the difference really is. So, this happened this week, when we saw that investors were short, and there was so much buying pressure that these hedge funds that were short GameStop actually had to cover their losses, which led to these tremendous drawdowns in their assets under management. Pretty much, the news spread that there was institutional money short this stock, and then the organized rally caused by the Wall Street Bets subreddit is what caused such enormous buying pressure that the institutional money behind these had to start selling their shares at a loss because they could not sustain the rapid increasing price of the stock. This can lead to very violent share prices moves, which is also known as a short squeeze. The reason this applies to the coming weeks is that there is no real sign that these organized groups will stop propping up these stocks or assets, which will further move the short squeeze and extend it. This can go to multiple assets and multiple stocks. There are already talks into the new asset to buy, such as Ripple, and I also heard some talks about GMC. Moving forward, we'll be keeping our eyes on the markets to not get caught in situations such as these, as they are not sustainable in long-term trading. If you are positioned to take a trade in these forums or along these forums, please be sure to use proper risk management, although we do not recommend that you're taking trades like these. Also, keep your eyes on how these moves can correspond with assets that we usually trade at Funding Talent, because we don't usually trade individual stocks, but we do trade major indices as well as cryptos and Forex. So, the risk sentiment for this week, it is furthering our idea of the risk-on market sentiment that we identified last week. As you can see here, expectations are higher for further economic growth. This is also combined with the news also from this week where you can see thousands and millions of people are ready and willing to invest their money into the markets. This was very evident this past week, especially with all of the short squeezes that were happening. So, alongside that, the vaccination continues to move smoothly. As you can see here, I put the numbers. 48 million vaccines have been delivered. This is just in the US, by the way. And then 26.2 million have been administered so far. This is furthering reasoning for our risk on markets. So, here's going to be the list of charts that we're looking at this week. As you can see here, this is an update on last week's GBP/JPY analysis. We were looking for a bounce off or a breakthrough this monthly critical zone. As you can see, we got a little bit of rejection right here, but then price eventually came back up and broke through on the 28th of January, which was yesterday. Again, we are on a daily chart right now. So, because price broke through, we can be expecting price to continue this bullish trend because there's so much buying pressure that allowed us to break through this previous monthly critical zone. So the only resistance that I'm really spotting next is at this 146 level, which we identified on the weekly time frame. So right now we're just staying between this resistance that is now support and this other resistance that is above us. So we can be looking for price to maybe retrace back down to this level, bounce off, and then push higher. But we will be expecting price to move higher up to this 146 level. Moving on to USD JPY. As you can see here, we actually identified this for you guys last week, this exact channel, which I said if we get a break of, we could see a push to this upper resistance fractal, which we did. We got a break right here at 1 o'clock on the 27th. Right after that, we got extreme buying pressure, bulls flooded the market, and moved price all the way up to this 104.85 level. We're now retracing slightly and pushing back above this level. So, moving off of here, we might be able to expect a move off of this level, or a break higher and push to this next resistance, which can be identified at 105.6. Moving into USD CAD, when we identified this last week, we saw that it was pushing off of this lower support fractal, and as you can see, I drew this last week for you guys. Price was going to continue moving up to this upper resistance. We're going to stay in between these two for right now. This corresponds with our risk on market sentiment, as well as the other two previous analyses have. We can see the US dollar rising and the yen falling. So, for this pair, I'm going to be expecting to move higher to this resistance fractal in the coming days or weeks. Until then, I'm just going to be keeping my eyes out and see if I can identify a play on a shorter term time frame. So we also identified this for you guys last week. A lot of updates this week. As you can see here, I drew these lines for you guys, and I said we were either going to get a push straight down or we were going to retest this resistance before coming down. As you can see, that's exactly what has happened. We came down slightly, came back up, retested, and now we're actually retesting it for the fourth time. So we can expect the same thing we expected on GBP JPY last week. We can expect a push lower, or we can expect a break above this and a close above this on the daily time frame if we expect for the Australian dollar to appreciate. But as of right now, until we get that, I'm going to expect price to come down to this lower support fractal at the 78.8 mark. Moving into Euro USD. So last week we identified this for you guys. We were actually retesting this zone right here. As you can see, we've actually come up a little bit after retesting this zone, completing our B wave and actually forming a right shoulder if this is a total head and shoulders pattern right here. So we're going to be looking for a completion of the C wave in the coming days or weeks. As you can see, we can be expecting the price to move anywhere down to the 1.19 level all the way down to the 1.17 level. If we get a completion of this head and shoulders, that would be a great move for us. But remember, for confirmation on the head and shoulders, we must have a break and close below the neckline, which is this fractal right here. So if we get a break and close beneath 1.26, that will be our entry. Now, moving on to the Bitcoin chart. So we are now on the 4-hour chart. As you can see, we actually finished a flat correction right here. And as soon as price retested this neckline right here, we got a very strong push off of this level. So, and now we got a pretty large rally just alone today, and we're going to be expecting a price to maybe come back down to this level or maybe go higher. Now that we got the bounce off of this and the final bounce, it is definitely not out of the picture to see Bitcoin start appreciating rapidly again. We also have a break of this trend line because of this last 4-hour close. So what I could be expecting for long Bitcoin would be a retest of this resistance line, which we're actually getting right now. So if we break back beneath this, then I will no longer be looking at longs. But until then, if we get a retest and rejection of this line, this would be a great opportunity to add more Bitcoin positions. Remember to do your own research and your own analysis before investing in your ad. So here we are back to the slides. While I was coming back to the slides, I did an independent currency basket analysis on each weighted average of these currencies. So, as you can see by looking at our currency strength and weakness chart, we can actually see that this analysis lines up pretty well with our risk on market sentiment. We can expect the yen depreciating this week, the euro appreciating, the pound appreciating. The New Zealand dollar is currently forming a double top, so I'm not entirely sure what we can expect there. We could expect to move lower, or we could break that double top and see a move higher. As well as that, I do see the US dollar appreciating in the next week. The Australian dollar is also pretty indifferent right now, with no real signals and no real determination of trend. The Swiss franc, I can see depreciating, and the Canadian dollar, I can see appreciating. So I hope this has been very insightful and helpful as to what you should be watching this next week and why. If you're not following us on all of our social media platforms, be sure to do so as we release new content every day across all of our platforms. And we'll be releasing these videos every Monday, every week. So, on behalf of everyone for funding talent, happy trading.